It's officially happening. Americans are simply not making payments anymore. This isn't just a small trend or a one-off blip in the data. It's growing, and the issue is about to explode into something much bigger. We're already seeing the signs that this is going to snowball into a massive financial and economic problem. What starts with missed car payments is just the beginning. Let's break down why this is such a major warning sign and how it affects everyone, especially if you hold any kind of debt. According to a recent article from Forbes, the number of Americans skipping car payments is rising fast. That's critical. A car is one of the last things people stop paying for. It's essential for getting to work, taking kids to school, getting groceries. It's not a luxury, it's a necessity. So when people stop paying their car loans, it means they've likely already defaulted on credit cards, medical bills, student loans, and other unsecured debt. And now they're on the edge of losing one of the most critical things they rely on daily, transportation. The numbers are painting a grim picture. LendingTree reports that 5.1% of Americans are now delinquent on their auto loans. Of that, 2% are at least 30 days late, and nearly 1% are more than 90 days behind. This isn't a minor uptick. These are red flags for anyone watching the economy. Car payments are usually one of the last payments people miss, so when those go unpaid, it signals severe financial strain. What's making this worse is that the Federal Reserve, while claiming to be data-driven, is relying on backward-looking data. By the time their metrics catch up to reality, the damage is already done. Mortgage delinquencies are also rising rapidly, but unless you're tracking consumer behavior in real time, you'll miss the warning signs. Delinquencies among subprime borrowers, those with lower credit scores, are spiking the fastest. These consumers are already stretched thin, and the pressure is mounting. When consumers can't pay their debts, banks feel the pinch. Lending slows down. Banks have to protect themselves, so they tighten credit standards, hoard reserves, and stop offering loans as freely. This hits the housing market, auto sales, and consumer credit across the board. And when banks stop lending, the entire economy slows down. Fewer loans mean fewer big purchases, which then leads to lower demand for goods and services. That leads to layoffs. Businesses start shedding jobs because they can't sustain payroll when revenue drops. And here's the catch. People aren't missing payments because they're irresponsible. They're choosing between making those payments and covering essentials like food, rent, and utilities. Worse, many are trying desperately to find new jobs and struggling. A recruiting veteran on TikTok recently highlighted just how difficult it is right now, even for highly qualified candidates. People are applying for hundreds, even thousands of jobs without hearing back. Interviews stretch across 7 or 8 rounds, often ending in rejection or complete silence. It's a brutal market, and that's for the good applicants. Employers are also starting to push more of the burden onto job seekers. In many cases, candidates are being asked to pay for background checks or credit checks as part of the interview process, sometimes $25 per application. Now imagine going through 10 interviews. That's $250 out of pocket just for a chance at a job. And that doesn't include costs for travel, clothing, or lost time. For someone who's already struggling, that's a serious burden. They're forced to choose. Do I pay for another background check and hope to land a job? Or do I pay my credit card bill to avoid another late fee? This is the impossible trade-off many Americans are facing. Most don't have an emergency fund. They can't cover a $1,000 surprise expense, let alone survive for 3 to 6 months without income. And now they're being stretched beyond their limits. This pressure is why people are giving up on payments. They simply can't keep up anymore. It's a vicious cycle. People fall behind on debt, so banks stop lending. Without loans, consumer spending drops. That leads to job losses. Unemployed people can't make payments. More defaults happen. Banks panic more. Lending freezes. The job market tightens further. And on it goes. The cycle feeds itself. If you've ever had to choose between paying your car note or your utility bill, or between a credit card and putting food on the table, you know how real this is. Millions are in that situation right now. And as more people fall behind, the broader economy gets pulled down with them. This isn't just about missed payments. It's about the fragility of the whole system. We're watching the warning signs flash red. If we don't pay attention now, by the time the official data catches up, it may be too late to prevent the crash that's coming.